Good afternoon, good evening, good morning to everybody attending from around the world. Welcome to another session hosted by Network Science. My name is Rhys Spencer. I am the head of APAC sales for TPI Cap Data and Analytics. We are the world's largest infrastructure and execution venue for OTC derivatives markets. Again, welcome. Thank you very much for your attendance today. I hope we have a really interesting panel discussion for you. Our panel today is focusing. I know there's a lot of sessions that are on technology and network science, really looking at the bleeding edge of deep technology and what the future looks like. This panel session, I guess, will be slightly different in that we'll focus on the macro level events that we're all interested in, the big things around the world that are driving macroeconomic shifts, changes in financial practices, and specifically for Treasury. We have a really good cohort of panelists today from various areas, including banking, corporate, and government. And so to introduce the first panelist from Axis Bank, Brajesh Chalil is the head of Treasury Markets and Sales. He heads up Axis Bank Treasury, started his career with ANZ, Grinleys, and then moved to Standard Chartered Bank. Very experienced, 2-decade plus stint in Treasury and financial markets, covering FX and derivative sales, ALM, middle office and back office. And he's passionate about creating successful businesses and strongly believes in service being a differentiator. Welcome, Brajesh, and thanks for joining us.
Thanks, Rhys.
Our second panelist is Manaswini Gaul. Started a career at National Housing Bank in New Delhi. She was part of the team which concluded the first ever issue of mortgage-backed securitization in India. Manaswini holds a bachelor's degree in commerce from Shriram College of Commerce, New Delhi, and is an associate of the Institute of Chartered Accountants of India and the Institute of Chartered Accountants of England and Wales. Manaswini was selected in the CFO India's annual CFO 100 Roll of Honor in 2017 and has a keen interest in fintech and emerging technology trends, specifically in Treasury. Welcome, Manaswini.
Thanks, Rhys.
On the consultant side, I have Dr. Bhavish Jugannath with more than 30 years of executive experience in global financial services, focusing on inclusion, diversity, and innovation. Bhavish brings more than 20 years experience working in senior management positions across Australia, Europe, India, and the US. Bhavish holds a PhD in economics and finance with specialization in international taxation and foreign direct investment. He's a fellow of the Association of Chartered Certified Accountants and also holds a master's in finance. Welcome, Bhavish. We look forward to your experienced insight. And our last panelist today is Vital Kulkarni. Vital is a highly skilled and accomplished senior executive with recognized achievements in fintech, having held several senior roles within the finance sector. He's currently based in Mumbai, India, as Senior Vice President of Treasury, with over 20 years experience in vanilla and exotics trading, structuring valuations, and market risk management for global banks in London, Singapore, and India. Welcome, Vital.
Hi.
I think we'll all agree we've got the experts that we need to discuss these interesting developments in Treasury. Just to set the scene quickly before we jump into our first set of questions, we're living in a very interesting time currently. It seems to me, and I don't remember a time like this where we've been moving from almost one existential crisis into another, and the whole world is geared behind solving the problems that are caused by these crises. And one of the observations, I guess, which is why there's so much interest in technology and deep tech and financial markets, is the accelerated move to adopt technology. Obviously, we had COVID driving the pandemic and everybody working remotely, causing some devastating impacts to our lives and indeed markets. And with everybody working remotely and moving remotely, we've become very accustomed to virtual sessions such as the one we're in today. And that accelerated adoption of technology has been very clear. We move on then to geopolitical challenges that the world is facing right now. We've got strife in many parts of the world, not least in Europe, and those are obviously having incredible market impacts, including with relation to sanctions and other impacts. And then finally, I guess one that another one we all care about significantly is the environment. Financial markets are looking very carefully at how we can play our part to ensure that the disruption that we as mankind cause to the environment is taken care of, and make sure that we don't end up, or that we end up looking after our planet that we need to survive. So with that backdrop, and then bringing that back to technology and markets, I just wanted to reach out to Brajesh initially. Maybe you could set some of the context on the impacts that has had in the world of treasury, and specifically in India and further abroad.
Thanks, Reese. First of all, thanks for having me. So yeah, you did mention that we are going through crazy times, but I think over the last 24 years, every couple of years when we've been on these panel discussions, markets do surprise us, and we've always seen some crisis or the other. So you're right, we're just kind of recovering from, I would say, a post-pandemic recovery phase, which we thought was going on pretty well, and now there's the current Ukraine Russia conflict, which has obviously taken oil to almost $130 a barrel. Oil's come off recently, of course, and we did see that volatility and that choppiness hit markets. So I'll lightly just touch upon Reese, both of these. So the pandemic, the pandemic, of course, was a tragic loss of lives. But from a markets perspective, and central banks worldwide did what they could, which was primarily providing liquidity. Just to give you perspective, the last crisis the world saw was the 2007 Lehman crisis, and we had about $1.3 trillion out in the markets. Today, the number is about $13 trillion, and we reached the end of that loose cycle, and we've actually had the Fed FOMC, which is the Fed deciding the rate hikes and rate cuts. The decision's out later tonight. So what's happened now is, since the world thought, or at least the world thinks, we're out of the crisis, we had factored in a 50 basis hike coming in today. But now, thanks to the Ukraine conflict, all that's gone a bit awry, and I think the bets are that we'll probably see a 25 basis cut. But what we're going to see is, we've obviously seen a supply-led inflation, which is why rates are going up. Now there's a conflict-led inflation, but conflict-led inflations don't usually help growth, so there'll be a bit of a slowdown there. So there's a bit of a toss-up on the rates, which way they're headed. And then coming closer to home, countries like India can't be away from what is happening globally. So if the US does start hiking rates, which they will, India's got to move accordingly. Till now, India's actually had a fairly accommodative stance on rates. We see that changing in a few months. We've seen dollar rupee impact. We've seen dollar rupee hit a high of 77.18, if I'm not mistaken. Thankfully, we know India is pretty strong on the reserves, and we saw a very strong and resilient RBI come in and cool markets. But traditionally, the reason, volatile times like this, and my colleagues on this call, Manaswini and Vittal, will also reconfirm to that, you'll never see a central bank defend or throw money when there are strong headwinds your way. So there is a strong dollar rally. The Dolex, which is the dollar index, is almost hit 99. Whenever there's a crisis, that's what happens, and your dollar rates are poised to go up. So the central bank was, I would say, fairly moderate in its action. We've seen rupee cool off now. Oil's also come back to about 100. Our view on the conflict is that it'll be fairly contained. We really don't. The world doesn't want it to go beyond what's happening. Axis Bank recently had a call where we had Catherine Houston. She's personally met Putin and worked on the last Crimea crisis as well. And we also had Pramit Chaudhary on the call. So Pramit is been twice on the National Security Board of India, and the views from both of them were the same, that the world is watching. India has, by the way, taken a neutral stance to what's happening, and the reason is, while America is an important ally for us, we actually haven't burned bridges with Russia as well. While we've condemned what's happened, we've kind of taken a broadly neutral stance to the whole thing. So we think the crisis might blow over. This is a fairly strong move by Russia, but generally it's been done to get a populist vote, and the kind of end game would possibly be see some kind of separatist movement where some parts of Ukraine might shift to Russia. But whatever happens, it'll be seen as a Russian victory and a NATO victory, is the broad consensus, Reese.
Yeah, let's hope it comes to a swift and peaceful end. Manaswini, I just wanted to come to you, Brajesh. mentioned a number of things that obviously impact treasury and the management of cash specifically. 10 times the issuance of US dollars than there was 12 or 13 years ago. It's an incredible number. And the US government they have no choice but to continue to, issue dollars. At the same time, there's inflation and everybody wants to get rid of their cash and purchase assets. So we have more inflation, and it's like a cyclical or a cycle. Manaswini, how has this impacted you in the management of your treasury at Mahindra & Mahindra, and is the infrastructure and the technology there and able to support you with your increased demands if they have indeed increased?
Yeah. Thanks for the question, Reese, and hello everyone. So I basically head the treasury at Mahindra & Mahindra Financial Services Limited, which is a non-bank finance company. And apart from all the market volatility and both in India as well as global, which NBFCs have faced, there have been a lot of NBFC specific incidents within India. I mean, if I may say so, that NBFC as a sector has been one of the most vulnerable sectors in India over the last, I would say, 3 to 4 years. And that has led to a couple of changes both in the way we look at the business as well as the way we conduct business. I will start from a very macro level. I think there is a lot more focus on the balance sheet strength, and if I may say so, sometimes even at the cost of profitability. So things like solvency, liquidity, ALM, those used to be never, at least in the NBFC arena, those never used to be so much talked about, which they have actually gained prime focus. Over the last 3 4 years, most of the NBFCs have garnered capital buffers. Liquidity buffers are 3 to 4x at least across all the companies that you see in this sector. And ALM, which used to be like an annex slide in most of the investor presentations of NBFCs, is now actually, I think, one of the first 3 4 slides and is mentioned. So that's the way market has started looking at us. So profitability uh, is important, but I think the balance sheet strength, because only if a company is able to withstand the entire cycles, then you can start thinking about making money. Also, because of a lot of a lot of the volatility, and especially the pandemic, sometimes asset quality is not something which is in the hands, which is in your hand as a company, especially for companies which operate in the deep rural sort of a environment. So that is one change which has happened, and that is across sector. Secondly, I think what everybody has also realized is the importance of the accuracy in the forecasting. And when I talk about forecasting, it is both in terms of getting early warning signals from a treasury perspective in terms of markets, liquidity, as well as your cash flow forecasting, how the loan is going to perform. And everybody has invested a lot into the strength or better forecasting technologies for sure over the last, it's no longer just a gut feeling or back of the envelope calculations that people do, and everybody has realized the importance of that. Thirdly, I think it has also stemmed a lot of need to be agile in terms of your business transformation. So whether it has to be turning off a geography or a particular business line or a vertical, with whatever is happening at literally on a quarter on quarter basis, one has to keep readjusting and starting over. So agility has become prime play. I think another disruption which our sector is seeing is, apart from whatever is happening, is the entire regulatory disruption. Our regulator, which is the Reserve Bank of India, has become very active and focused on our sector. And the so-called regulatory arbitrage is also sort of going to, narrow down, which is, and we have to now more and more be like a bank and compete straight on head on with the banks. So, and I think the answer to that is to reduce your cost of operations, whether it's cost of credit, cost of collection, and clearly digital is the way to go. There has been a lot of spurt of fintechs, and initially they were being looked at as competitors, but I think overall now everybody is realizing that the fintechs have to be partners in this whole journey rather than being competitors. So, I mean, if I had to sort of summarize, these are some of the key changes which have happened in the way we conduct or look at business over the last few years.
So it seems like a more organic adoption of technology. If
Right.
I'm summarizing correctly, more organic adoption of technology, not through force, but through a desire to be more accurate, more competitive, and essentially uphold share prices. Um, you mentioned a couple of things that were really interesting around, making sure that you're a more secure business and a more reliable business for your clients, for your, I guess, your suppliers, and for shareholders as well. With all of that work, when firms do that, obviously it can tend to reduce credit risk in the market, and that's something that as a head of treasury analytics, so Vital, I'm coming to you next. That you'll want to monitor, and you'll want to measure and be able to forecast where defaults may come from. Obviously, with geopolitical risks and events that are happening around the world, we know defaults are quite a topical subject at the moment. But how important for you is having access to, and has this been disrupted at all, having access to the right analytics, the right data to feed into those analytical platforms and technologies and systems that you use?
Uh, See, as Brajesh mentioned and Manaswini mentioned, the crisis that has happened over the last 2 years has impacted the systems, right? And what has happened is the market has been very volatile in all the aspects, right, from FX to interest rates to credit. Now your systems have to be geared up to process this data and give you analytics to support the trading and risk management. And what has happened over the last 2 years is, if you've noticed, there is a migration of interest rate benchmarks that happened from LIBOR to new alternate benchmark. So to cater to all these requirements, a lot of banks in the world, as in India, have invested in the technology to upgrade their systems. At the same time, because of the COVID, people realized the importance of BCP, business contingency planning. So you could find that you're not accessing the treasury front office where the entire business happens. So banks have created parallel treasury environments where dealers can sit separate and operate as safe as possible. Regulators were very keen on the data aspect, how to measure measures like value at risk and your portfolio sensitivities, and banks have been keen in creating the quality data. You mentioned about the credit markets. Yes, you have seen a lot of volatility in the CDS spreads, especially in the April to May 2020 period. The spreads have normalized, but if your systems are not geared up to process that data, the management of your book is very difficult. So what I've seen in India, especially, is many of the banks have invested a lot of money to upgrade their systems to move on to the next version of their softwares, so that they are in tune with the latest happening abroad. Yeah.
Now let me just follow up with one quick question, and related to technology and the migration of systems. Often we see that there needs to be a catalyst to make that kind of investment. How has the cloud deployment of technology solutions impacted HDFC Bank, and are you looking at cloud as the future of the technology space to run your bank?
Well, see, we are dealing with customer data, right? So customer data security is very important. So you have to play within the regulatory environment, whether the regulator is allowing you to save your customer information on the cloud. So there are advanced economies, Singapore and other G4 markets, where it is possible for you to save the data on cloud and scale your infrastructure. But in India, that environment is still hazy. We are not very clear on the data, whether we can save that data on the cloud. So currently, at least in India, the infrastructure is still localized databases. So
Yeah,
cloud is
very
there,
interesting.
but there is still some time to catch up to that.
Yeah, I guess it's often an advantage to move as a second mover. Let people make the mistakes first, find out what the right solutions are, especially when it comes to people's personal information.
Right.
And sometimes it's almost better to be a little bit delayed. I mean, that links nicely up with Bhavesh. If I could come to you, you work with a lot of governments. Predominantly around Africa. Is it a similar scenario there? And what are the governments doing to not stifle innovation when it comes to fintech?
Yeah, so thank you for that, Chris. So, in a way, you will see that I think what has been mentioned, the trend is following, I think, globally for the last 2 years. Coming to the African context, I would say for the last 2 years, Africa, maybe I would just spell out some specificities. There are many, more or less average, maybe about 40% of the population average that are still unbanked. So I think these are some specificities. But what we see with this the last 2 years with this pandemic, I think overall globally, it has the post-pandemic or even the pandemic has accelerated the transformation of banks. I think this is where I think all the economies are relying for future growth. So I think this is, I would say, like the heart of each government to promote. So what we have seen for the last 2 months, I like with India. So with this pandemic, in terms of technology, many things has been moving, has been accelerating. So technology, I would say, many technology has come up, and we are now in a process to start with. This pandemic gave rise that many of the population in many countries were unable even to access their banks or to access their bank accounts, and also they could not travel. So even for those who wanted to open the amount of unbanked population to open bank accounts, it was near to impossible. So that in a way was the edge in terms of going back to technology or moving ahead with technology. So with that, I would say the last 2 years have really got an exponential growth. I would say in terms of venture capitals. Venture capitals in terms of technology related to the financial services has increased by 46% in the last 2 years. So that's really a huge growth. And beside that, in terms of government, there has been massive investment in terms of technology related to financial services, including banking and insurance. So I would say in a way, fintech and insurtech, this is, I would say for the last couple of months, the last, I would say 16 months, this has been the buzz in the banking sector. So fintech, everyone is talking on that, given that there are a large amount of unbanked population. However, I would say Africa in general has the highest amount of mobile penetration, mobile usage. So with that, banks is having an edge in terms of using this technology. So penetration of mobiles technology is easier in Africa. So what we see in terms of new products, I would say there is a lot of decentralized finance has been going on in terms of reaching most of the population. There has been a high rate, of robotics now in Africa. I would say in terms of RPAs using robotics. In fact, beside fintech, coping with the COVID-19 in the health sector, robots has been there. No one was able to reach the patients. So government has invested massively in terms of technology, fintech, insurtech, medical tech, I would say. So from this, even controlling lockdown, there has been massive use of technology. So in a way, coming back to the financial services, the new product that we are looking at is in terms of fintech is wallet has become really big use in terms of there. And very important, as I mentioned, in terms of decentralized finance, blockchain, changing the complete ecosystem. This is becoming from myth to reality in a way that, in terms of regional banking, international banking, there is now a great move towards building the blockchain ecosystem. And here, a lot of product is emerging. For example, eKYC. And many banks now are having digital accounts, right? You can open digital accounts from mobiles. This is a reality now. So everyone is going in terms of digital accounts. There are many banks who are offering that in terms of wallet as well, wallet payments. This has become very common for the last, I would say, 6 months, which was something, that's why I say from myth to reality, because I would say the last 8 months, big progress has been made in terms of use of technology. And I would say, aside from that, access to finance, because there is a lot of financial instability with this COVID, and now with this geopolitics. So what is happening? We are seeing a lot of new instruments beside banking in terms of crowdfunding coming in Africa. Crowdfunding is becoming, I think there has been a growth of about, I think, 23% in terms of, people using crowdfunding. Both, I would say, because investment as well with the low interest rate, even investors are moving to this type of investment in terms of lenders, right? And there is peer-to-peer lending, and so this is giving rise to new types of technology, new types of platforms. So in a way, I would say that apart from what we have seen in terms of the negativities, but this has given rise, the disruption is also showing some positive aspect. And overall, I would say, to sum it, because in Africa, there has been lots of issues in terms of financial inclusion, right? In terms of poverty. But this technology is kind of coming in a way. People are realizing, government are realizing that technology could be one of the aspect that could be looked upon to reduce poverty. So in a way, in terms of financial inclusion, in a nutshell.
Yeah, thank you, Bhavish. I think the innovation that we're seeing in the digital assets world, including DeFi and cryptocurrencies, has really pushed systems it basically has created new technologies that other parts of the financial markets can use, and not just financial markets. You mentioned eKYC. eKYC is a really, really important process for everybody these days, not just in the digital assets world, in the banking world, in the lending world. And I was KYC'd recently by paper in the UK, and it took 2 weeks. And I'd like to have had that process digitized for sure. I'm just picking up on the DeFi. I mean, DeFi, it's innovative, it's new, it's creative, it's exciting. But and one of the things it does is democratizes finance, and you could argue it's inclusive, but it introduces risk. So non-sophisticated investors, again, exposure to crowdfunding you mentioned, and taking on that credit risk they may not fully understand. I just wanted to come back and ask Brajesh, should that be left to the professionals, or do we think that those products should be introduced into the retail markets?
So Reese, you have a couple of bankers here, and even I would put Manaswini also in the bank. And you have a PhD as well on the call. So I think most of us would speak prudentially, but I'll be also. So my take is, it's again the mountain of money that's been lying around. It's $13 trillion, Reese, mind you. And when you have that kind of fuel, it ignites a lot of fires. So today, people are buying NFTs and pictures of monkeys and chipmunks, and they're all going for crazy valuations. So is there a hype, and will there be a fall? I would definitely think the answer is yes. But I think I'll just step back a bit, and I think the real thing that we need to look for is the blockchain that is the back of it, which Manaswini also alluded to. We've seen banks. I know, like, as Vital mentioned, HDFC, Axis, a lot of banks are working with technology which is based on blockchain. Corporates like Mahindra are definitely doing it and far up the curve. So I think blockchain is an amazing thing, and like you correctly said, it is a level distributor. It differentiates, and in countries like Africa, what Bhavish said, where necessity is the mother of invention, right? So when you couldn't run around with physical currency, the best payment systems and the best payment wallets are in Africa. So the point I'm making, Reese, is that I definitely think blockchain is here to stay. And with regard to the cryptos, I think most central banks, including India, the US, China, everyone's working on their own digital currency. So what's going to happen is there will be digital currencies, and if you're playing with cryptos, there is a fair chance that you could get hurt. But right now, there's enough liquidity going around, so it's buyer beware. That's my two bit on the crypto and the blockchain part, Reese.
And just to add to what Brajesh said, is crypto world currently is very complex. There are so many cryptos available, and the regulatory environment is changing day by day. So retail investors should take care. If they're betting on Bitcoin or Ether, they should know the risk behind it.
Yeah, I think one of the one of the knock-on effects is the push. If we were discussing earlier disrupting or being disrupted, and the push that blockchain technology and the inventions that have come out of blockchain technology have made on other parts of the market. And one specific example I would pick up is on Ripple. So Ripple was meant to replace Swift. So Swift got together and they increased their throughput, their ability to execute trades, the level of transparency and the level of efficiency there. And in the end, Ripple hasn't been able to replace Swift. Swift is still there, but it's arguably much better. We actually have one question from our audience, so I'd like to ask that, Manaswini, if I could ask you this question. It's around the US Fed announcement that we're expecting later today. If the US Fed raises interest rates, and this question is from Shania Aurora, how well do you think India is poised to counter the outflux of foreign flows?
Yeah, well, look, I'll start with a disclaimer that every time there is a global crisis, the buzz in India is that this time it's different and we are a little isolated and we are better. So I think one has to accept that when there is a global sort of disruption and rates and liquidity is impacted, there will be some impact on India. But if you look at the macros, whether it is our forex reserves, whether it is inflation, we are much better in a much better scenario than we were in, let's say, in 2013 or 17 or even 2008-9. So I think from a macroeconomic standpoint, we are definitely much better placed to face this. I would also think that we should also benefit from the relative EM play, because within the EM space now there is a lot of uncertainty around. Well, if I may say so, China, Russia. I mean, there are certain EMs which used to get a lot of flows are now being avoided by the market. So India should be. We expect India to be one of the gainers out of this entire, the geopolitical turmoil which is happening, especially in the EM space. So yes, there will be some outflow, no doubt about it, as the central governments around the world take out the liquidity and start tapering in whichever shape and form. There will be outflows, liquidity will get tight, but whether it will become unmanageable, and the answer is no.
Good. I think that's probably reassuring to the pose of the question. And we have one more just coming in, so I'd like to jump to that. Unless there's any further comments on the outflows of the expected outflows from the Fed hike. So the question is, do you think if crypto is used as a currency in the future, how will it impact treasury management? And I guess it's a topical one, given that we've seen a lot of corporate treasuries taking a position in some kind of crypto asset. Maybe Bhavish, if I could come to you with that question, how will treasury management be impacted if cryptocurrencies are used actually as a currency?
So first of all, I would say that definitely, I think from the previous, what we have been discussing, everyone would agree that crypto, from one end, when you look at it, it has been increasing. It's highly volatile. So as it is of now, crypto, there is a high level of risk attached to that. That's why you would see globally, many countries that initially adopted that, then after a few months, they have taken it out in terms of as a legal tender. So as I would say, crypto is something very highly risky, I would say. However, where we are going, crypto for the last, I think, a couple of years has increased tremendously. And in terms of number of cryptos available in the market, you would see many new cryptos are coming in and will be coming. So this is kind of, putting pressure from different governments in terms of how we are going, the disruption in terms of technology. So the key question around, I would say, around the world, around governments would be whether we adopt it or we don't adopt it. They are waiting. It's like a kind of wait and see approach. However, in the meantime, what we have seen, many government has taken, maybe some steps where they have introduced the CBDC, the central bank digital currency. Maybe this is one way, of looking at it, where it would be something highly legal. We are expecting for the next month, I would say. Maybe we can take the example of India, where it has largely been announced in the budget. It has been followed by several other countries, even in Africa, where all governments are now coming in terms of the e-currency. We wait in terms of how. Personally, I would say that these e-currencies would be something available or in place in the next couple of months. So maybe that will change a bit in terms of the investment perspective. This is one. However, I would also say for example, in the Mauritian context, recently, I think with this risk, there has been, in terms of the monitoring, in terms of the legal aspect, there has been many, in terms of legislation, many laws that has been coming. The last 2 weeks, we have seen, in terms of the laws, we have adopted in terms of the virtual currency services token offerings, which in a way is guiding in terms of what it's not a perfect law, but I think many countries are adopting that in terms of virtual assets, defining what would be allowable, what will not be allowable. So I think with time, maybe this use of crypto, we cannot, in terms of capitalization, is increasing for sure. So countries are, maybe by within days and months, they are learning from that, and they are trying to adopt legislative framework. So my take would be that in the couple of months, with CBDCs, with wallets, with cryptos, there would be a whole new types of legislation that will be coming, that probably it will not be 100% perfect in terms of regulating the use of cryptos, in terms of the acceptance. So I think together with new products, the legislative framework is being, in a way solidified. So the last thing I would say, that why this is being, the case, because I think in terms of Africa, there are so many investment that is happening, that many big companies are now accepting, cryptos. Many, let's say in the African context, in terms of cars, you can purchase with coins, right, with bitcoins. So the question is, when one is coming with that, so many businesses are trying to follow, because this is coming, like, with time, this might be coming as a competitive edge for some of them in terms of the method of payments, where we are coming in terms of a digital world. So then, it's like I sit in various committees. So mainly, from the private sector, it's a question of, if I don't adopt it, if we don't go with what technology is doing, maybe we will be left behind. So there is a pressure from the private sector as well, because they want to run with time with this digital world. So there is a pressure for the government in some way or the other to adopt it. So I think pressure will be coming, especially from businessmen, big corporates. So in a way, I think, with time, we'll say if the legislative framework is there or not. But with the pressure, somehow, the world will come to adopt it, maybe not as it is today, but maybe with more regulatory framework.
Reese, if I may add to what Dr. Bhavish said, especially in the Indian context, as everybody mentioned, that the cryptocurrencies per se, whether they will achieve legal status anytime soon is still a big question mark. But CBDCs are coming, and from a non-bank standpoint, I think two things which we think they could bring, or they should bring, is a, reduce our cost of collections and transaction costs. So if that in any way can reduce, usage of CBDCs can reduce the intermediate cost, that will definitely increase the offtake of these CBDCs. And secondly, just like any lender, if through the CBDCs, the trace and track mechanism for the borrowers becomes easier, and we are able to sort of get to trace our borrowers and improve the collection efficiencies. That also would be one very key sort of benefit from this. So definitely this space is being watched very, very interestingly.
Yeah, you picked up on one of the main attributes of the blockchain technology, and it's transparency. And transparency, generates data, which brings me nicely to a question from the audience for Vital, if I may. You mentioned around cloud technologies, and there are cloud-based treasury systems being released recently. When it comes to the data challenges, would the adoption of cryptocurrency impact the launch of cloud-based treasury systems? Would it be beneficial? And when the data challenges you talked about, have they had an impact on the adoption of cloud-based treasury systems?
Well, the cloud-based system is completely different platform altogether. So far, if you've seen the technology development in the banking space, you had earlier the client server, then you had a grid computing. Now, if you want to scale up your system, you need to have a cloud computing, where you don't need to maintain the software. It's on the cloud. The software upgrade happens remotely. That is where the banks are looking at the cloud technology to be. There are leading vendors in the world who operate completely on the cloud. Their software is maintained at a central location. But as I said, in case of India, because the data security is paramount, we are still to take that step. But globally, I see that vendors like Bloomberg, etc., they are on the cloud. They are offering latest development in their software to all the clients in the world based on whatever development happens. There is no lag between the software development cycle and offering to the customers. And you're getting the same functionality throughout the world. It's not like a localized deployment of a software. So I see these advantages of cloud computing, but I think there is a lead and lag that is happening because of the regulatory frameworks.
Yeah, I think so. Just from our perspective, we're seeing a lot of adoption in the cloud. We operate across the globe. A lot of our customers are asking, we put in all our infrastructure in the cloud. Is there a better way to connect with you? And so, we've launched cloud-based, data delivery solutions and technologies, because it seems everybody has some part of their infrastructure in the cloud.
Well, just to extend from the data, there are functionalities like a counterparty risk measurement or a market risk measurement. If you don't have that system in-house, rather than making a parallel system implementation in the bank itself, you can outsource that to a vendor who can run it as a managed service on his server on the cloud. So the only requirement that you have is to send him the data and make him run the numbers and send it back to you. So that is the beauty of cloud computing. But then for that to happen, you need to send that customer information, the transaction level information, to a server which may be outside India. If the servers are localized in India, maybe that data security aspect can be taken care.
Yeah, absolutely. I think so. We've just got a couple of minutes left, and there's one more question from Ninand Deshpande. I'm just going to rephrase slightly, but there's a growing criticism that none of the new age fintechs have seen a complete credit cycle. And with the recent meltdown in new tech companies, do you think capital that's funding the fintech sector will be more judicious going forward? I want to pose that to Manaswini, if that's possible.
Yeah. So yes, I mean this criticism is there because obviously money has been easy for the last decade, and yes, there have been cases of lenient credit scoring, and that is why in my first initial remarks I did mention that everybody is realizing that these fintechs could be complementary to the large lenders, whether it's bank or non-bank space. So using their platform and the technology, especially the innovative technology, but the judiciousness and the systems or the systems and the processes which have been proven across various business cycles. So a complement of these two could be a win-win. And we have seen that especially in India, especially in the payment space. There were a couple of innovations. We call it the jam trinity. There was these Jandhan accounts. There is this Aadhaar and the mobile penetration, and on top of it, there was this entire innovation of something called a unified payment interface (UPI), which has now become like a world-class payment system and has completely transformed the way retail payments are happening in India. And something like this is also started in retail space. There are many loans, these pre-approved loans, disbursements through wallets. I'm not saying that the large lenders or the basically the established players wouldn't have done it, but a lot of this innovation has been brought on by the fintechs. So perhaps in my mind, I think the future will be a sort of a complementary play between these two.
Just to add
Yeah,
to what Manaswini said, from the treasury perspective, I have seen over the last 20 years there are many vendors in the treasury space, but there are only few vendors who survive, the cycles.
Yeah.
A vendor has to find his niche, that he's a specialist in a particular area. If he's not, then the bigger vendor will eventually take over. And if you happen to have a software of the smaller vendor, then you need to do again a re-implementation, re-engineering of your entire processes. So it's very important. You need to analyze the vendor properly. Okay, what is the purpose of that software? Is he going to be surviving? What are his other customers doing? Whether he has the cash flow issues or not. You need to be taking care, apart from the functionality of the software, even the stability of the vendor.
Yeah, I think we picked up on a theme crosses the fintech sector. We've seen this exponential growth in new companies and new innovations. But you're exactly right. When we get to the end of the credit cycle, do the mature companies survive, and then do we see a bit of a washout of experimental technologies that have come into the market? Do you think there's still room to grow, Bhavish? And is that a common theme across Africa, or are the jurisdictions operating differently from each other?
Definitely, I think if you look at the latest trend, I'm just talking as an economist as well and as a consultant. Technology is here, innovation is here, and I think as we have mentioned, it's being accelerated. We just don't hope that we have any other disruptions. Even today I was reading the World Economic Outlook, where growth has global growth we're expecting from 5.5 now to 5.9 to become 4.4 generally. But we are expecting that this geopolitics things will not contain too much, and we will be back to our growth curve. And however, we will see that one of the key aspect is if ever we don't have any other Omicron or any other variant that comes in and again do some disruptions. However, we'll see from this analysis that we can't say that we will not have any other variants or any other maybe economic I would say fundamentals from any mishap or any negative news. So given that, one thing is for sure that technology is going to improve. We have been in whatever the situation for the last 2 years. I think one of the pertinent things that we have been relying on is on technology. We have seen that, now from a business angle, one way to survive for many businesses, because currently you will see in Africa or you will see around the world, what it has led in terms of the last 2 years, financial distress. And one of the things that today from we are expecting some information, some news happening, what the Fed is going to do, and everyone is relying on that. And many opinions have been given by many big economists in a way that once this increase, though it will be inflation is growing is going up, and and a general rate of increase where many central banks have been increasing the rates, but there is an issue that this is going to have a high impact on financial distress of the companies. So what I'm trying to say is financial distress is a big issue. I myself, in Mauritius and some African countries, the 2 years have gone massive. We have seen massive clients having financial issues. We have seen the balance sheet is very weak now. So one way of getting that, getting back to the balance sheet is in way of adopting technology. So we have seen many surveys have seen for the last 2 years, for those who have been able to sustain businesses is, adopting kind of technology. And roughly with technology, in terms of salaries, workforce, infrastructure, this relieves the balance sheet by around 30 to 40%. So I'm here that my take is technology will improve, will continuously improve, and we are going to go. We are heading towards an e-world, an e-economy, right? I think in many budgets we are talking about digital banks, digital university. So everything is going digital. So here I would say that if you look from the investor perspective, many of them we have seen crypto, it's going down, but investment in technology, I think this is one. I think two sectors have mobilized many investment for the last 2 years. It will be one is technology, and second is in terms of medical field where much investment is going there. So I'm here. I would say that technology is something that there would be some risk, yes, but it's going to grow.
Yeah.
So,
So
Reese,
please carry on, Brajesh.
if I
Yeah.
can just come in. So I think just building on what you said, and again what Manaswini added as well. I think the way you could look at it is if fintechs have actually come in, and they've obviously done very well, and the question rightly was asked about the valuations going so high, because fintechs did so well because, first of all, fintechs are built around convenience, and if you look at banks, we're built around compliance. So that's the kind of stark difference that you see. And fintechs have approached banks or the financial sector in a very smart way. They approached it from the retail side, so it was the payments and all of that was taken up. So again, as Manishwini correctly said earlier, there was this worry about fintechs taking over banks and all of that, but that's not true, because fintechs don't want to be banks. They've realized it's too complicated. You have a central bank which with too many regulations. So what's happening now is a happy marriage, where banks realize that we might as well mesh or merge with fintechs. The number of banks that have merged fintechs within them is crazy. You'll see banks with at least 5, 10, 15, even 100 fintechs embedded within them. So I think it's a nice world that we're moving, and like you correctly said, it's improving efficiency, and it's all the benefits are going to the customer, and it's bringing the cost of doing business down. So globally, I think that should definitely impact inflation. Last point on digital banks. Now that's a kind of sticky. It's a bit of a hairy area, because if you look at digital or neo banks that have started over the last 5, 7 years, I don't think anyone's really been able to make a big dent. Again, my prediction there is what you will see is a digital bank within a bank. So you could have HDFC, ICICI, Axis, or even some of the larger foreign banks start building a form of digital bank within themselves, right? And that, I think, has a probably better chance of survival.
Yeah, absolutely. I guess that's the nirvana for a fintech, isn't it? To get picked up by a bank and essentially acquired. I guess that's the end game that we're looking for. No, we've covered a lot. We did expect to run a little bit over time, which we have done. We've covered a lot around inflation, around rates, around technology, the adoption of cloud, government policy, as well as the geopolitical and natural sort of crises that exist today. I just wanted to very quickly, as a quick fire, I guess, fun wrap up, is come to each of you for your 2022 positive prediction for the year. What's Brajesh? I'll start with you, since you're at my 12 o'clock on the screen. What's your 2022, or even if you want to expand it further out, prediction for this year in the financial markets?
So, most of the questions I get are related to dollar rupee. So I'll again play it pretty safe, but the dollar rupee view, is I would think we would probably land between 76, 78, which is closer to 77, is what I think the average would be for dollar rupee. So I still continue to feel that rupee will not depreciate as much as the forwards indicate. So that's on rupee. And on interest rates, I've been calling it for a while that while everyone felt that there would be a sharp uptick in rates, I think there's a lot of government intervention, so things will go slowly and sideways. And like Bhavesh was mentioning, you could get hit by the third or the fourth wave, and conflicts and something else will come in. So I don't see rate hikes going up as sharply as the market's indicating. So that's my broad 2-bit race.
Good. Yeah. So some stability. Manaswini, can I come to you next for the same question?
Yeah, I think my first prediction was what Prajesh also said. I am also a bit of contrarian as far as interest rates are concerned, especially at least for India. I think the bullishness that we are seeing perhaps will not materialize in actuality, and a bit of a base effect, a bit of COVID waves, a bit of everything will sort of keep rates on a leash for a while, or they may not go up as steeply as predicted. And I think secondly, I feel that, and it could be like a 2 to 3 year sort of a view, is I think now we are ready for the next big credit sort of wave, which has been sort of not happening in India for the last 4 or 5 years. So I feel that we are now on the cusp of this entire credit wave, which will start from this year.
Interesting. So medium term, some volatility this year, not as much as we expect. And Vital, can I come to you with the same question around your positive predictions for the year?
Yeah, so my positive prediction is the volatility will die down, but there would be intermediate clusters of volatility, right? So there would be some Fed decision will cause some volatility, some Ukraine crisis will cause. But if you've seen over the last 2 years, because of the COVID crisis, we had these episodes. So same thing will continue, but by end of the year, I think we should come back to the normal levels of equity volatility and FX volatility. On the
Okay.
second thing is inflation. I feel the inflation is mainly because of the supply chain disruptions. So as this crisis gets over and the supply comes into the market, especially on the commodities, you will see those commodity prices will again come down. I think market has forgotten that oil was at around $40 per barrel a few years ago. Now we are at 130. So this spike had happened in the past, like in 2007-8. So and it has come down. So I think it will mean revert. That's a
Yeah,
positive.
I remember WTI actually going negative on one day. I think it was last year, wasn't it? So a buying opportunity potentially with some intermittent volatility and transient inflation.
You should balance your portfolio. That's the thing.
Always good advice. And Bhavesh, if I can come to you last, and then we'll introduce the next session.
Sure. So on my side, I would say I'm also kind of positive by end of this year. I think elevated inflation would persist for longer. I think this will be ongoing with the ongoing supply chain disruption and high energy prices are continuing in 2022. This is what I suppose. My prediction, assuming inflation expectations stay well anchored, inflation should gradually decrease, I think, as and when supply demand imbalances would decrease and wane in 2022, and monetary policy in major economies. So in a way, I think by this year there would be 2022 still at the global level some imbalances with this supply chain and inflation going on, and assuming that we don't come across any other waves, and we tend to lower down in terms of geopolitical. I think my guess would be 2023 we can now come in terms of a global growth chain.
Great. Well, thank you all very much. Really appreciate your energy and your time today. Thank you to Network Science for hosting the session. I think we'll wrap up there, and I think there's a new slide to come up with the next presentation. We do have one vote to poll for attendees. Please, if you could just if you see the poll come up now. Hopefully I did this correctly. And 100% of respondents so far found the discussion very insightful. So thank you so much for offering all of your expertise.
Thank you.
Now, the next session in DeepTech Innovation Week is going to be around corporate treasury management in today's VUCA world. And thanks again. Take care. Have a great week.
Take care. Cheers.
Thank
Bye,
you.
guys.
Thank you.